Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you have joined us for the Clean Energy Metals Conference. Our next presentation is from Neometals. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Chris Reed, Managing Director and Chief Executive Officer of Neometals, which trades on the OTCQX Best Market under the symbol NMTAY and on the ASX under the symbol NMT. Welcome back, Chris.
Thank you very much, Cecilia, and good morning to all of the viewers in America. Greetings from the west coast of Australia, where it's still winter and it's very, very late at night. It gives me great pleasure to tell you about Neometals and to update you really on our three processing technologies that recover critical materials from waste and high-value waste streams. So essentially enabling urban mining, and creating a resilient domestic supply chain of critical materials. We are listed in Australia and the US, so here's the mandatory speed reading test, the disclaimer. So essentially, what does Neometals do? My family, a long history in mining. Originally, we were hard rock miners, precious metals, and then we developed the world's second largest hard rock lithium mine. And then we moved into materials recovery at the end of the recycling chain. So rather than being in the upstream minerals, we moved downstream into materials recovery and recycling. So what we've been doing is commercializing a portfolio of sustainable technologies that can recover these critical materials from high-value waste streams. The sort of blueprint or green print that you can see there is a plant that we are currently building for Mercedes-Benz to recycle lithium-ion batteries. So what we do for the people that own our technologies and the plants is that we enable circular supply chains. We ensure their compliance with their social license and their regulatory obligations. We give them a sustainable operating cost advantage and ESG, a carbon footprint advantage. And then it's our main task, and we are a very heavy R&D business to continuously improve our technologies. So as I said, we're currently building the plant for Mercedes-Benz that serves as industrial validation of our battery recycling technology. And so successful operation of that will trigger product readiness for our larger commercial plants. In terms of our product readiness, we've forecast there for our large integrated plants in the second half of calendar year 2025. We've also got two other technologies that can recover lithium and vanadium from different streams. And we have taken those through to the industrial validation stage. So how we do it, once upon a time, we developed mines in a reasonably similar sort of staged manner, going from, through exploration, resource definition, reserves, scoping studies, pre-feasibility and feasibility studies. And now we've switched to developing technologies because, one, they're not finite resources and we can use a bit of a cookie cutter approach and develop lots of projects. But we put them through a very disciplined technology readiness program. So we've taken all of these from TRL1 on the left-hand side through to the battery recycling, which is at TRL8, industrial validation, soon to be going into commercialization. And we have two technologies that are at the continuous pilot, or TRL6. In terms of, what we're doing and when, so our prime focus is obviously the commissioning of the Mercedes-Benz plant in Germany and transitioning to full commercial operations. I mean, that business is generating revenue. It's not cash flow positive yet, but that's our main focus, is to get that net cash flow positive. We're then going to look at bringing in some industrial partners to take our lithium and vanadium technologies through to the industrial validation, and then we're going to divest some residual hard rock assets and recycle capital. And that's certainly, what we have been focused on. We don't live in a bubble. The battery materials, notwithstanding that, recycling batteries is not the same as producing commodities out of a mine. One, you don't have the mining costs or the risks. So we've got, certainly a much more attractive business model there, but we do have to conserve our capital. So we've right-sizing our organisation. We've restructured our cost base and integrated and executing on a detailed austerity plan. In terms of a corporate dashboard, having been in lithium since 2009, we do have a very, very strong correlation with the lithium price. Great on the way up, not so great on the way down. 2 years ago, we had $1 billion market cap pre-revenue. Happy with the share price, unhappy with probably what the inherent value is. It may have got a bit of a head of steam, where we sit today. I'm not that happy with the share price. We are earning revenue and we are approaching commercialization of our core business. Yet the fact that we've got such a high correlation with prices in our minds just means, I think we offer a very good, compelling risk reward proposition in the battery materials space. We've got a very loyal shareholder base, a very steady top 20. We have about 9 million Australian dollars in cash, 15 million in investments. So we are starting to look to liquidate, and no debt. In terms of a strong team and culture, I'm assisted by an executive director, chief operating officer, Jenny Purdy, also sits on the board. Darren Townsend, the head of the Vanadium business, and Chris Kelsall is our CFO, company secretary, and then sitting up on the non-executive board, keeping an eagle eye on us, are specialists and sort of industry heavyweights. So our main business that I'll address today is Prime Mobius, which is our business whose main focus is building world-class lithium-ion battery recycling plants. And so, look, we are in an uncertain world, and why we went to recycling is because, fortunately, we have some certainties in recycling. We know that, the demand for consumer electronics, stationary energy storage, batteries, and EVs is continuing to grow. Probably more aggressive in China than it is in the West at the moment, but still forecast to grow at a compound annual growth rate of about 25%. So, we know there's more cells needing to be built. We know that in the production of those cells is very, very high scrap rates. So, the first Nevada Gigafactory, it took Panasonic 5 years to get the scrap rate below 20%. So significant volumes of production scrap. And we also know that lithium batteries wear out every day. Every time you charge them, they degrade just a little bit. So, we are fortunate that we deal with some certainties there. So we've got, if we have a look at the pool of recycling material, it is one of the only growing ore bodies in the world, and it's a very, very high value ore body. So if you've got a ton of EV batteries, which are like typically NMC 622, it's the same as having a ton of ore that's 15% nickel, 15% copper, 2% cobalt, and 2% lithium. There's a significant value, somewhere between $7,000 and $8,000 per ton of material. So, equivalent to multi-ounces of gold. And look, we're focused, our plant building joint venture is based in Germany, and we're building that plant. We've got our own operation in Germany, and we're building that plant for Mercedes-Benz. Europe is our primary target. North America is our secondary target, then Asia ex China. But to put the European opportunity into perspective, by the end of the decade, there's forecast to be about 600 billion euros worth of recoverable material in lithium-ion batteries. Now, largely they've been imported from China. So, if we want to be masters of our own destiny, we've got to recycle the cells that we do import from China. And we do it in Australia, we do it in you do it in the US, they do it in Europe, right? Until we build up our own domestic capacity. We've been massive importers for the last 5 or 6 years. And we need to recycle and close the loop and to reduce the reliance on Chinese materials. Recycling's the best way to do it. So what we developed in 2016 was when we started our journey. While we were building the world's second largest hard rock lithium plant, we started building this recycling. So in terms of what the process does, we can handle individual cells, we can handle full battery packs. Depending on their state of charge, we can dismantle, discharge first, and then dismantle those. And then what we do is we put it through what we call a spoke. That's the sort of almost like the crushing section in a normal mining operation. So we shred up the batteries, we take out the plastics, the steel casings, the metal foils, and we sell those products. What we're left with is a material that we call black mass. It's the ground up anode and cathode, so the positive and negative side of the battery. It looks like if you combine pepper and salt, it has that sort of appearance. So what we do is we put that into sulfuric acid, and we use traditional techniques that we would use in the mining world to pull the base metals, so copper, cobalt, manganese, nickel, we take out via solvent extraction. So we produce those as a sulfate, and the nickel, the cobalt, and the manganese can go back to making new batteries. The graphite won't digest, so we filter that out. Because we use ammonia as our pH adjuster instead of cheap salt or cheap sodium, we get rather than getting a nasty sodium sulfate that ends up in sort of detergents, we end up with an ammonium sulfate, which is a feedstock for fertilizer production. So for that, we made the finals of the German National Sustainability Award. We didn't win, but it was good to be named in the finals. We did win the best new technology on the London Stock Exchange in 2022 for that process. So very environmentally friendly in the refining hub, and that's where our granted patents are. We've got 5 granted and 12 pending. So what we did is, we've basically just adapted typical mining processes, but for a new feed. I mean, these batteries are very, very high grade feed. So that's great. We've got a solution. We pioneered it in Australia. We proved it up at SGS in Lakefield, Canada. And then we've got to deploy them. And we've got to deploy them in the Western world. And we need a partner to do it, because very, very hard in Australia to go and build plants all around the world. So what we did is we wanted to target Europe. Europe was, and probably still is, just slightly ahead in terms of the rollout of battery production and the number of EVs, heavily subsidized. But nonetheless, so we partnered with a company called SMS Group, who's a 150-year-old German plant builder, 14,500 employees in 95 sites around the world, fabrication facilities, obviously, in Europe, North America, India, and China. We divided the business into 2 parts. So Primobius is the plant builder, and it's licensed the technology and builds plants based on them. We will also build for people who have their own technology. But so Primobius builds the plants, we make a plant supply margin over the duration of the contract, and we have an IP holding company where we get technology licensing royalties. So Primobius is the front-facing business to the customer, and then we utilize our relationship and cross-shareholding with SMS Group in Primobius to have a back-to-back construction contracts. So they're essentially delivering our technology. And, we've got to sell these plants. So, what we've done is we've got our own operation in Germany where we provide a lithium battery disposal service to the German car makers. That's enabled us to form a partnership with Mercedes-Benz where we're building them a 2,500 ton plant, and we've entered into an R&D collaboration with them. And then that's enabled us to issue a number of licenses. So we've licensed Stelco in North America. We've got other licenses for various parts in Europe. And in terms of the wants, in terms of the business models, our preference is for plant supply and technology licensing because we don't have to deploy a lot of capital. We would prefer, especially in this market, a low risk, low capital sort of technology licensing, royalty and plant supply margin business. But we must satisfy our customers' needs. And in Europe, they're probably different to what they are in the US. In Europe, they've got the EU battery regulations, right, where recycling is mandatory and very, very high efficiency rates. So number one, anyone that's producing products that have got lithium in them and cars and the like has to recycle. So one, we tick their license to operate. Two, we give them a sustainable competitive advantage. The key element in those lithium-ion batteries is the lithium. The lithium carries the electricity. Everything else in the positive and negative side we can change and alter, but lithium is the highest value product, and without it, the batteries don't carry electricity. So when you sell the nickel and the cobalt, just the two big co-products, even though there's 8 revenue streams, what it delivers is the lowest the lowest lithium cost, which gives them a sustainable competitive advantage, and you don't have to worry about the Chinese dominating 85% of the supply. And also, we give them a big advantage in that we can strip out 85% of the carbon footprint because there's no mine attached. You don't have to get lithium from Australia or South America or the US. You don't have to get nickel from Indonesia. You don't have to get copper from the Congo. So it environmentally is very good. So this is the big plant that we're building for Mercedes-Benz at Kuppenheim. We're transitioning, so we've got the spoke and the hub. We're just transitioning from into commissioning for the spoke. We're still in the construction for the hub. We have the official opening, I think October 21 by the German Chancellor. So that plant really serves as industrial validation of our technology. We're supplying that on an EPC basis, lump sum, royalty free for that volume. Mercedes-Benz produces about 2.5 million cars, with their current ambitions. Admittedly, they're probably delayed a couple of years, but they'll need somewhere around 900,000 tons of lithium batteries a year to go into their fleet. So in producing that many batteries, there'll be quite a lot of capacity there, and we'll have to supply them a lot of plants, but we've got to do a first job and we've got to do it well, and we are. And so that's a good segue into our commercial pipeline, which is building out very, very nicely. So we have licensed Stelco in North America with respect to end-of-life car batteries. And so looking forward to working with them. They're a great company. We have non-binding MOUs with the Tochu, and we're currently running a trial for them at our plant in Hilkenbach. We recently had a signing ceremony with Neometals. That's half owned by PTT, which is the national oil company in Thailand. The other half owned is a large automotive parts business. And then we've got 4 licenses to an associated company in Europe. So a good commercial pipeline there. In terms of, what it looks like at a high level, the indicative commercialization plant, like I said, once the Mercedes plant sort of is working, that triggers product readiness for the larger plants, in terms of we can do spokes. Some jurisdictions, they don't need to close the loop. So we can sell the shredding spokes and producing black mass, or we can produce, fully integrated plants and allow the owners to fully close the loop. In respect of our other technology, it produces lithium hydroxide and lithium carbonate. So essentially, what it does is it takes a lithium chloride solution from a brine deposit, and you can either get lithium from hard rocks or brine deposits. About 2/3 of the world's lithium is in brine deposits, and there's quite a lot of new technology going in, particularly around the direct lithium extraction to replace evaporation ponds. But the traditional flow sheet is very, very agricultural, is what I would say. They use soda ash to make carbonate. They use caustic soda to make lithium soda or lithium hydroxide. It's a very reagent heavy process. And so what our process does is actually introduce the chloralkali cell. So one, we've got to purify it. And chloralkali is a 100-year-old technology that's been turning sodium chloride into sodium hydroxide very efficiently at low costs. And so what we've been able to do is to turn lithium chloride into lithium hydroxide at a significant reduction. We're looking at about a 50% reduction in the conversion costs over the typical flow sheet. Now, when lithium prices are high, it's hard to get any traction because everyone just wants to get into production with the traditional flow sheet. But as lithium prices come down, we're seeing unprecedented interest. So we've just finished a 1,000-hour long duration pilot test, and the results we expect to announce in this half of calendar 2024. And so essentially what it does is just replaces reagents with electricity. And, there's the ability, obviously, in a lot of jurisdictions now to have renewable power. I mean, solar and batteries, it's never going to be cheaper than in the next couple of years. We've also got a technology to recover vanadium. And so look, vanadium typically used to harden steels. Also, it's an essential ingredient in titanium alloys for aerospace and applications. And it's the best sort of ingredient that we can find in stationary energy storage batteries. They have these, it's a chemical storage of electricity in a liquid vanadium sulfate solution, and they're called a vanadium redox battery. And, a lot of the development was done by, funnily enough, invented in Australia, first commercialized in Japan. Then the Chinese borrowed the concept and have been rolling out. The biggest producers of vanadium redox batteries in the world are in China. Robert Friedland owns the second biggest one. And so vanadium is, we see, going to be, in terms of, it looks like lithium in 2009, really, in terms of, its use is forecast to grow by 400% over the next sort of 15 years. So we developed a process that can recover it from steel slags that are produced up in Scandinavia that have a lot of vanadium in the iron ores up there, and they get a lot of vanadium in the slags. And we developed a very environmentally friendly process that actually can sequester carbon at the same time as recovering this battery material, and doing it at the lowest quartile costs. We spent about $20 million over 3 years taking that through to full-scale pilots and feasibility studies. And unfortunately, in the next 6 months after we did the results last year, the price halved. But the demand continues to grow. As I said, the primary use is in steel. We all know what's happened to steel in China, but, everything will rebound in time, and we fully expect that too. So where that project is so we own the technology. We've licensed a special purpose vehicle to develop a first project, and we're assisting that vehicle. We are the majority owner of it, and we're assisting it with debt and equity financing process at the moment. And we've got some fantastic people to run that. We've got Johanna Lamminen, who's very, very well known, ran the national Finnish gas company, big bank CEO, and Darren Townsend, who works in Australia here, but has built a number of mines. And so our Barrambie titanium vanadium deposit, once you go into recycling and recovery, you find that you don't really need to do the mines anymore. So that is being prepared for sale. This was just a short update the other day, but I think, look, in summary, I think we give our shareholders, we've got a very unique value proposition. We think it is a very, very smart way to pay the battery thematics without worrying about the mining risk and a lot of the commodity risk. We're playing those certainties in that, the waste streams are real, production, scrap, end of life, they're growing. We've got technologies that we've attracted and either co-own them or attracted multi-billion-dollar partners to help us commercialize that. We'll continue doing that, to bring these to fruition and become cash flow positive. They're all environmentally friendly. They give the owners sustainable competitive advantages. We've got flexible business models. We can look to take more risk as things improve. But at this stage, the technology licensing model works for us. So thank you very much for your attention. Now I've got to open the Q&A. Rightio. What are your pending patents on all technologies? Where are they? What countries can they be? When will they be roughly granted? Look, I'll have to take that offline. Certainly, we have multiple families in terms of, we've got the most granted patents we would have on the lithium electrolysis, purification electrolysis technology. Followed by the battery recycling, followed by the vanadium recovery. So we've got a whole suite. The numbers you'll find in the quarterly report, I must admit I don't have them off the top of my head, so I'd have to apologise. Has there been any discussions regarding building any recycling plants in the US? Close. The northern side of Lake Erie, up at Port Nanticoke, which is where the Stelco guys are thinking about putting that plant. But I'm not aware of. I would say eventually, yes, because we have licensed them in Canada, the US, and Mexico. Third question: what is your advantage over your prime competitor, Metso, if there is one? So, look, they are the only other company. We have peers, and people say, oh, you've got competitors. You've got Lysical, Glencore, Redwood, Umicore. And I'm like, well, actually, they could be potential customers. And certainly we've had discussions with most of them. We don't want to be a merchant recycler, so plant supply. So Metso, they do have a black mass refinery, so they can build those hubs. The primary advantage, like, we have a patented process, and from what I can tell and what's publicly available, I think mine works a little bit better in terms of recoveries and carbon footprints. We've certainly been out and had them provide estimates to us to build our own plants, and they're in line with the SMS ones. Their flow sheet is, I don't think proprietary, but they have freedom to operate. But having said that, we are building a first of a kind recycling plant for a tier one car maker. Okay, next question. Will there be announcement of granted patents concerning the Eli Tech or other technologies? So we don't make a big fuss as those national phase grants come through. I think we've got to have 20 to 30 granted patents and maybe 40 to 50 in pending. Otherwise, we're going to clog up the announcement platforms. Which country is the biggest where the patent? So look, we lodge all of them. So, for the lithium, Eli, we've done that for all the lithium producing countries. For the battery recycling, equally, all of the world's biggest economies. Thanks a lot, Chris and team, for your hard work. All the best. Thank you very much for that comment. That's all the questions I've got. And I'd like to thank everyone for taking time out of their day to listen. It's been a pleasure, and you can always reach out directly to the company and we can get in touch.